All right, guess what? It's another fantastic episode. Actually, episode number 55 of Real Estate 360. This is Steve Connolly, hashtag unemployable, and
Jason O. Myles, hashtag the real estate trainer. What's going on, everybody? How you feeling today, Steve?
I am doing fantastic.
That's right, man. Steve, we've had what I would call a bit of a slowdown in our industry as of late, and we've been looking for ways to really kind of navigate our way through that. And I think that today we should share some of our findings, if you will, with our listeners and viewers.
absolutely. We're going to talk a little bit about the state of the union as it relates to real estate investing. And listen, guys, there's multiple layers of this. People say the real estate business is really hot. And of course, they're talking about real estate as it relates to the retail market. And realtors say, yeah, there's limited inventory. There's a lot of buyers, and they're well qualified, and properties are going under contract quickly. This is all true. This is one layer of what's happening. But what about what's going on a little bit lower, a little bit deeper, another layer below that? So where are these houses coming from? And what about the investors that are in the marketplace right now? What are those investors, and what are we doing as it relates to where we are in the state of the union as it relates to real estate? Of course, all of this being, heavily affected by, I'm not even going to say COVID-19. I'm going to say the perception of the media brought upon by the quote unquote COVID-19. I don't want to get into politics here. I'm just going to say it's always all about perception, no matter what. So let's talk about that a little bit. But mainly I want to talk about specifically, and I think you do too, Mr. Jason O. Myles. We want to talk about, so what are those layers, and what does that mean for us? Where do we go with that, right?
That's right. And, where we're coming from is the very beginning of what we need to do to find success as real estate investors. So from the wholesaling to the fix and flip, finding the deals, finding the money, we're talking about those pieces right now, and how this global pandemic is affecting our industry. And as Steve said, the retail side is gangbusters. People are still buying houses. There's houses that are hitting the market and under contract inside of, a week, and closing in 30 days or less, because they really, people are really wanting to buy houses and there's no inventory. So we see that problem, obviously, as real estate investors, and we say, hey, let's go buy some houses and fix them up. Well, today that's a little easier said than done, unless you have, a good chunk of money in your pocket, or you have the ability to raise your own private money, right? So lending has changed. The lending parameters have changed. The lenders now want people to have better credit scores. They're kind of done with those 580 programs, right?
That's right.
They're kind of done with those right now. They want people to be, probably mid sixes. They want you to have a substantial amount of money in the bank. And when I say substantial, I mean substantial. I mean, Steve and we were just talking about a program that recently, I think last week he sent us we got the email.
Actually, late last week. It might have been Monday. I'm not even sure.
Yeah. So, and that's probably one of the most lenient programs that are available right now.
Yeah.
And that's a 65% LTV. That's going back to the way we were doing things 20 years ago. At 65%. They're wanting 15% down. Here's what that means. It means if you're buying a house, if you found a house that, just to keep numbers simple, for $100,000, and you need $100,000 in repair, this lender is going to loan Well, they say they loan it up to 65% of the acquisition, right? So that's 65,000. It's not quite that, because now you've got to put the 20 or 15% down on top of that.
Are you talking about the one we just got?
Yeah.
I think that was 65% of the after repaired value, and it was 85% of the as is value. So that meant
that's not bad. I mean, that's the
it's
same.
not.
Yeah, that's, so 65% ARV, 85% as is, basically purchase price.
Yep.
But you got to put that 15% down. And most
real hard cash.
That's right. Plus the 90-day reserves.
Yes, sir.
Now,
speaking about that, and I know where you're going with the kind of the illustration. I took the same transaction. It was 22 units down in Columbus that this guy's trying to buy. So I said, let me see if I can help you with it. And so I sent it over to one of these commercial guys, and you know what he came back with? He came back with 30% down.
Yeah.
And that's really kind of more along the lines of what we're seeing is like 25. And he said, well, can he do 25% down? And I said, he can, but then he won't have any reserves, or he won't be able to buy all 22 units, or, there'll have to be some adjustments to it.
Yeah.
But, 30% down, that's like, holy moly, that's huge.
Yeah.
And then he was 65% of the after repaired value as well. Now, would you explain to people what all that means, as is, and the 65% ARV and all that?
Yeah, man. I mean, it's so let's say this house, let's just going to use that simple math again. It's $100,000 acquisition, $100,000 renovation. Based on the numbers, that house has to be worth approximately $300,000, right? Because a lender's going to lend 65% all in this particular case, all in of acquisition and renovation minus your down payment. So that means on a $300,000 after repair value, or ARV, that's $195,000 that the lender would potentially lend, less your, in this case, 15% down payment. But that's only 15% of the acquisition price, not of the renovation cost. Most lenders are still doing 100% of your renovation budget. Some aren't. Some are only doing 90. Some are doing 80% across the board.
Wow.
So this one isn't that bad. That's why this one kind of stands out right now as one of the better ones that we have access to, with 15% instead of 20%, and it's only on the acquisition. So that's pretty good. That means another $15,000 down. If it's $100,000 acquisition, on the $195,000 they're gonna be able to loan you. So that's $180,000 loan, with roughly $95,000 of that in escrow for your renovations. So you still they've shorted you $5,000, right? So you're going to have to pocket that somewhere, plus your closing costs, plus your 90-day reserves. 90-day reserves just basically means 3 months of payments. They're going to want it. Sometimes they want it, they're going to generally want it right at the closing. So you're going to come out of pocket right there with it. And then you're going to need at least another $15,000 just to start the renovation.
That's right. And a lot of people don't think about that,
Yeah.
So let's add that up. So 15% of the acquisition, that was 100,000. So that's $15,000.
That's $15,000.
Yes.
Roughly $3,000 for legal fees and stuff like that.
All right, let's call that 18,000 now.
Mm-hmm. And then this lender's what, 3 points?
Let's call it 4 points.
Okay, 4 points.
Yep.
So that's another roughly
8,000.
Huh?
8,000, because I believe that's going to be 4 points on the acquisition and the reno.
That's right. And so it's going to be 160 or 180.
True. I'm rounding up.
About 7,500. So it's pretty close. $7,200. I mean, it's, so I mean, that's going to put us up. And then if you're paying 10% interest on all that money, that's 18,000 over a year. So that's another 4,500 right there. So I mean, that right there puts us close to $25,000. I mean, we haven't even
15 to get it started. So now you're at 40.
Yeah, exactly.
So you got $40,000 to buy this $100,000 property.
Correct. Correct. And you need that. And so people are like, what? It's pushing a lot of people out of the market right now that aren't sitting on 30 or 50 grand.
Yeah.
Excuse me.
Bless you, my child.
So let's take a break and come right back and talk some more numbers.
Okay.
We'll buy your house. Click 833willbuy.com. That's 833WELLBUY.com.
Or call 833-WILL-BUY.
Se habla español. Llámanos. Call us today.
And guess what? We're back. This is the Real Estate 360 show. Steve Conley, #unemployable.
And Jason Myles. Hey, Steve.
Yeah.
Just want to take a quick break here and just to tell everybody or say to everybody, thank you so much for listening, watching, subscribing. Please continue to do that. The Real Estate 360 show, realestate360show.com. Go there, visit, see what we're doing, look at and listen to older episodes. Download it on your on whatever platform you use for podcasts. Real Estate 360. We're everywhere. Everywhere you could listen to your podcast, we're there. So go there, check us out. Also, we talk a lot about raising money and finding money and so on and so forth. We've got a few freebies right now on the website, Real Estate 360 Show, that you should go and check out. How to raise private capital. There's your 4-week action plan, which kind of lays out everything you need to do to get going in your business and build your team. And a bunch of other stuff. I mean, it's full. It's chock full of resources. So go there, check it out. And thank you for those that have. Please continue to do that and share. And we're going to continue to bring you value. So thank you. Thank you very much.
On that just a bit,
Absolutely.
And listen, this is really your vision on the real estate training. That's why they call you #the real estate trainer. And you look, and you've been around the country with some really big names. And,
Correct.
The one that I know the best, of course, is Robert Allen, who wrote the book, No Money Down.
Correct.
And then you follow that with a whole bunch of other books like The Challenge and No Money Down for this decade and that decade, and The Blue Vase. He wrote that too, I'm sure. But
yeah, we've done a lot. I've had an opportunity to create information for the likes of Robert Allen, J.G. Banks, Damon John, the Flipping Formula, the guys from Flipping Boston. I've gone around the country and trained with them. I've trained some of their individual students as well. And most importantly, we created that content so that they could actually go out there and sell it. And they had a workable model. So, these are things that we're putting out there just because we think it'll work or we think people might like it. I mean, these are things that have worked. They're tried, tested, true. There's no secret sauce. There's none of that. It is, if you want to win, you got to do the work, period, point blank. And it starts with having an accurate roadmap to get to your destination. And basically that's what we've created for you.
And where I was going with that, and I appreciate you, because I was hoping you would come in and tell me more of those names again, because I only recognize a few of them. I don't necessarily follow, the DIY network.
That's right.
I do it every day, so it's not like I want to come home and watch it on TV.
That's right.
I like a variety, but the whole point was, you came to me and you said, "Hey, this is what I think we should do." And listen, this is like 98%, Jason O. Myles. Let's get real. And when I heard what you were doing, though, I said, "Wow, that's a great idea." And it's kind of disruptive when it comes to real estate training. It's not, let's tease these people out there, the potential clients, with, we're going to teach you how to do a real estate transaction in 2.5 hours. But when you show up at these training sessions, they're going to teach you how to take a new seminar and pay $2,000, $3,000 to learn how to, maybe flip something. But the question is, when you get there, are you going to learn that or not?
Yeah.
Probably not. You're probably going to learn how to buy the next seminar because, listen, those people are in the seminar sales business.
That's correct. I mean, having been the person that writes those 3-day seminars, you know, they are geared to truly give you information. But once we hand that over to the promoters, you know, they throw in the sales pitches. So they will limit the amount of information that you're actually paying $2, $3, $5, $6,000 for this weekend to come, you know, and you're going to get sprinkled with wholesaling. You're going to get sprinkled with lease options, just enough to tease you, you know. But there's on a 3-day weekend, they're broken down into 1-hour segments. Every couple segments in there will go an hour and a half, but you can't learn how to wholesale a house in 50 minutes. It's impossible, you know. And you're on to the next subject, and then the next subject, and then the next subject, and then the next subject. So it feels like you've had a weekend full of information, which you did, but not enough information to actually go out there and do something. And that's where the $25,000, $40,000 sales pitch comes in.
Well, my experience has been that a good percentage of each of those segments is kind of geared subliminally and overtly about, hey, you know, you really need to take this seminar we're going to be talking about at the end of this presentation.
There's a lot of NLP, a lot of neuro-linguistic programming going on for the whole weekend.
So so we're different, right?
Absolutely. I mean, listen, you know, when I met you, Steve, I was obviously just starting out. And as you know, I say all the time, you were very instrumental in me learning how to make money in real estate, finding my way over a few humps. Just, you know, and, you know, I know for you, it's like, oh, I didn't do anything. I just told them what it was. But that's what it takes. Just telling people what it is. So there's no, like I said, there's no trick, there's no secret, there's no nothing. It is what it is. And all we're doing is telling people what it is and showing them what works. This is a very simple process in terms of how you're going to learn how to do a thing, because somebody will teach you A, B, D, G, and skip all those parts so they can, you know, keep you coming back for more and more and more and more. And some of that is understandable. You have to pay for people's time. Time is money. But you must know that it doesn't take $50,000 to learn how to wholesale or fix and flip or learn lease options or learn all these little techniques in between. We want to find, you know, I mean, Robert Allen did it best, I think. He said, we want to find 1,000 people that want to make $1 million. And he spent the better part of 20 years doing just that. And by the way, helped a lot more than 1,000 people reach their millionaire status, you know, and through real estate. And that's what this is all about, sharing information so that people can be successful in their own right.
So I want to kind of recap a little bit and it add a little bit of clarity, I think. So when you came to me with this thing, with the real estate training program, the way you presented it was, we're not going to hold anything back. We're going to tell everybody what it is they need to know up front. And that's why right now on the website, there's so much free information.
Mm-hmm.
Now, that doesn't mean you're going to learn it. That's up to you, you know, but the information is right there. It's free. You don't have to go to a hotel and sit through 2.5 hours of presentations and then go to the next thing. It's right there. It's on the website right now. Now, you know, we also know that a certain amount of people who are going to take the action are going to need some help. So we're going to have some paid programs. That's coming. But here's what I love about this whole thing is most of it's free right now. And so we're developing a following of people. That's our most important thing. So we want to build relationships on a massive scale and say, okay, here's everything you need to know, right?
That's right.
And you're doing this, and you're saying this is what you need to know.
That's exactly right. And like you said, right now it's free. I mean, this is a program. Even when we were selling it, we were only selling it for $47. But we're giving it away free right now because of all that's going on. People are losing their jobs. People have to find a way to make some money right now. And we, along with a few other people that we work with, are willing to share this information for nothing, so that people can take advantage of the opportunity that's in front of them. To be honest with you, if anyone has had the inclination to do real estate investing, and now they're sitting at home, this is the perfect time to learn. Utilize this time, take the free courses, and implement these processes, because you can do it from home. You can do it right from home.
And in addition to all the regular real estate information that's up there, you just put together a private money course, a free one.
Correct.
What are we calling that?
Raising private capital.
Raising private capital. Now, that's something that can be utilized right now in this particular economic climate that we're in, along with potentially joint ventures. Mm-hmm. And really, that's where we're kind of going with this whole program is, what are the solutions? We know what the problems are, right? So we just highlighted the problems. So what are the solutions? There's raising private capital. There's doing joint ventures. There's certainly going into your own direct self-directed IRA accounts, your 401ks, your savings and that sort of thing, or maybe even tapping into your HELOC, your personal home equity line of credit. But HELOC, HELOC, personal loan, whatever.
Home equity line of credit.
That's it. Thank you. I knew that. Obviously not like that. Whoa. But so again, the whole idea is, okay, so we got all this information. So where do we go? What are the solutions? We're solution based, right? I'm talking to one of my mentor students yesterday. I said, forget about transaction engineering. Forget about what you're going to focus on right now. Forget about everything. Just go find the real estate problems and look for the solutions.
Right. So let's take a break, Steve, and come back with some of those solutions.
Okay, let's do it.
Right.
Do you need to sell your house? Well, our company will buy your house. We make the process very fast, very easy, and it's all cash. All you have to do is give us a call today.
We'll buy your house. Click 833willbuy.com. That's 833willbuy.com.
Or call 833-WILL-BUY.
Se habla español, llámanos, call us today.
And we are back, Real Estate 360 and realestate360show.com. We're talking about solutions. We're solution oriented. Let's find we know what the problems are because they face us every day, right? So how do you move within those situations? So there really aren't any problems. There are only opportunities.
That's correct.
So what do we do with this?
So it just goes back to what we were saying in the first segment. There's the problem. The problem is the money is getting expensive, right? Or we don't have enough money. I mean, the money is really not expensive money in terms of hard money, but the amount of money you have to put into the deal has increased greatly, right? And that takes a lot of people out of the market, out of the realm of being able to invest, because they may not have $40,000 or $50,000 sitting on the side. So where's the opportunity there? The opportunity
question.
Yeah.
Does that mean there's no money out there to do deals with, or there's only a really small amount of money to do transactions?
No, there's a ton of money out there. And all we have to do is, find other people that are in the same situation we are and partner with them.
So could that be related to perception? I mean, with the tightening of the hard money, if people are focused on that, then you're going to create a perception that there's limited opportunity, that there's limited money. But if you stop and you back up a little bit and you widen your perception, you just said there's a ton of money out there.
Mm-hmm.
So where is it?
The money's in people's people's bank accounts. It's in their IRA. It's in their 401k. It's absolutely everywhere. And for those that understand where to find the money, where to really look for the opportunities, I mean, the opportunities are going to be endless. It doesn't mean you're going to go out and raise $1 million in 10 minutes. But if you don't get the conversation started, you're not going to raise any money. You're not going to find anybody to partner with. And then you'll just sit there and be waiting for things to get better. And things are always just what they are. So it's not that we're in a bad time. We're in a great time. As you said before, it's your perception. We're in a great time to invest. This is a phenomenal. This is one of the best times to invest because this is when people get rich.
Yes.
This is where wealth is created. So don't have scared money sitting on the sidelines. We know there's an exit strategy here. We know it. So get out there, make deals, get yourself some partnerships, learn how to raise private equity, and get in the game. Just get in the game.
Yeah. Do something, right?
Yes.
Do the opposite of what everybody else is doing. Because, I used to sell insurance when I was in college, and I remember that they love these statistics that 96% of Americans are either dead or dead broke by the time they're 65, right? Okay.
I like that one. They're either dead or dead broke.
Yeah.
That's a hell of a That's a good stat. That's a good stat right there.
It's a great stat. And, most people are going to say, oh, crap, 96%? That only leaves 4% of people who are financially independent. And of that 4%, some of them are just barely independent. And there's only a small percentage of those that are, totally financially free. So you know what that told me? It said, whatever most people are doing, don't do that. Obviously, it's not working for them, for the most people. So stop doing those things, which is, I guess, maybe following the mutual funds and the 401s, because most people are doing that. That's where the channel is. Maybe you should step out of that, learn as much as you can about mortgages and notes and real estate and self-directed IRAs and those kinds of things where you can earn, 10, 12, 15% joint ventures on projects. And, I've got one that's kind of a hybrid joint venture I can talk about a little bit. And I know you have a bunch of stuff, and but let's just talk about the idea first. What you got for me?
Well, when we're looking at these joint ventures, it's for most people, it's always about either you don't have enough liquidity to put into the deal, or you don't want to put all of your liquidity in a deal, right? So it's a great way to get involved in a deal. And yes, let's say you've only got 20,000, and then you partner with another group that has another, 20,000, and you put this money to work. And when you sell this property, let's say you make 60,000 in actual profit. Well, you just took 20,000 and you turned it into 50. You've got what is that? 150% return?
Yeah, at least. I thought it was 60. I thought you made 60,000 with 20.
Well, but you're splitting that 50-50 with the person that you partnered with.
Oh, right. Okay.
So you've got significant growth on your money, percentage wise. Where are you going to get that? I mean, we're doing some other things, and we're, making, 8 to 10%, 11% a week, which is still fantastic, but that's just for smaller amounts of passive income or not passive income, smaller amounts of just cash sitting there, right? But when you can put $20,000 to work and turn it into 40 or 50,000 over a 6-month period of time or less, you're doing really, really, really well.
Yes, you are.
Because you're servicing a community that absolutely needs you. And that's the housing community.
And defining the roles, there's two people in a joint venture typically. Let's just say there's two people in a particular joint venture. So you just mentioned that somebody brings in $20,000 and puts it into a joint venture, right? Is that right?
Yes.
So then there's the other person that's actually doing the purchase and the renovation and all that. Now the person bringing the 20,000 is getting a true 150% return on their money because they're really not doing too much. They're just investing, right?
Yes.
Now, the guy that's actually out there buying the house and doing the renovation, he's not really getting a true 150% return on his money because he's adding a lot of time, effort, and energy. So that's like his job portion of it as well. So, but from a private lender point of view, man, you're knocking it out of the park.
That's right. That's right. And you just got to keep it going. And you know, the more you press forward and looking for the solutions, the easier it is. And then there's, you know, people say, okay, well, what about the wholesaling aspect of it? I mean, if people can't get money, you know, how am I going to wholesale this deal? Well, again, people are getting money. People are doing the same thing we're talking about right now. They're developing joint venture relationships, partnerships. They're raising private capital because they understand that this is a time when you can turn very little money into a substantial amount of money in a relatively short period of time. Even if we're talking about a year from now before things, quote unquote, go back to normal. In that 12 months time, if you could do something today, just once a month over the course of the next 12 months, that could add $20,000 or $30,000 a month to whatever it is you're currently making, would that be life-changing after 12 months?
It'd be totally life-changing. And the opportunities that are out there right now, I mean, if there is a slowdown, if there is a tightening of funds to purchase renovation projects, even fluff and buff, you know, the little cosmetic renovations, even if those are difficult to fund, then that means there's going to be a supply and demand issue where there's going to be more supply, less demand. So those prices are going to come down. That's going to create a gap. We're always looking for the gap or the problems to solve or something along those lines. So then you recognize those, you put a joint venture together, you buy those, and in a time when most people are, you know, sitting on their hands thinking, oh my God, I'm scared to death. What's going on? You're out there making it happen, you know, and creating wealth and generational wealth, possibly for you and your family, right?
That's exactly right. And those are the things that we have to pay attention to. We have to keep our eyes on the prize, if you will.
Yeah.
You know, yes. Is it a little tighter? Sure. Is it a little slower? Maybe. But the opportunities are still there. We're seeing them every day.
Yeah. Yeah.
You know, we just have to take advantage of them and find ways to get to where you want to be.
And I got to say, the opportunities really sort of are starting to peak around the corner, you know. They're not really quite here yet. I think we've got another couple more months. We got to get the court systems open. There has to be, you know, a little bit of leverage on this side to push people into some action, which is, you know, dispossessories, foreclosure actions, that kind of thing.
Yep.
Those are happening, but, you know, at a very, very, very slow rate, depending on, you know, which city, town, state you're in. And, but once that leverage shows up, then look out.
Yeah. And they're going to be there. I mean, it is what it is. I mean, we've got people now that we're working with that are ramping up. They're raising money to go and buy properties out of foreclosure, you know, to do the whole mortgage rescue thing and, you know, lease options, so on and so forth. We've got people right now that are doing that for the single family side. I mean, literally people are preparing for the courts to open up. And when they do, they're going to be jumping on deals, and they're going to see all kind of different things coming into the market. I mean, just, you know, you don't have to watch your local news because they're not going to talk about this until something else dies down in the news. They're not going to talk about the foreclosure rates and the everything else that people can't pay right now until something else starts to die down. And then it's going to be that's the next hot topic. And you'll see a lot of people coming into the market saying, here, let me teach you how to buy foreclosures. Let me teach you how to buy properties out of bankruptcy. If you learn now and you partner with people now, you will be in position in 2 or 3 months when all of this begins to happen. So don't waste time. I think that's what we're really saying. Don't waste time. Begin the dialogue. Talk to people. If you don't know anyone to talk to, call us. Send us an email, and we'll start telling you, hey, this is what you can do. This is what we can do. And you build from there. Just don't sit around and do nothing.
Let's talk about a few specific examples when we get back from this particular break.
Absolutely.
Hi, this is Sammy with Sammy Hadid Real Estate Keller Williams. Are you looking for a top producing agent who will look out for your best interests, top dollar on the sale of your home, a well-negotiated contract, an efficient closing? Please call me at 305-978-4249. I'm more than happy to set up a consultation. I'll put together a proposal for you to net top dollar for your home, what it is that I'm doing to get all my homes sold. Then you can decide what's best for you. Again, I'll do whatever it takes to get your home sold for top dollar, and I promise you that I will protect your equity with my life. 305-978-4249. Sammy Hadid, Hadid.
Welcome back. It is the Real Estate 360 show. And we were alluding to the stories, and a lot of people love the stories, right? That's why I went to all of the real estate trainings I could go to and all the RIAs. I wanted to hear specifically what people were doing. Tell me what you did and how you did it. So here's one. I'll just kick us off with it's kind of a joint venture hybrid, if you will, because you got to look at every single little situation and say, what makes sense from my point of view, of course, but from, your participants, your joint venture, your money person's point of view, what would make sense for them? So I was down in our area of investing, 30310. This was a couple of years ago, and saw this church sitting there in 30310. A church, what am I going to do with a church? Right? But I said, wow, this thing is in the right area. It's huge. There's got to be some opportunity here. It was 12,000 square feet. It had some challenges with it. Okay. So it had been vacant. It was leaking. It had mold issues. It had water issues. It had no parking, but it was 12,000 square feet. So I called. I said, I got to find out, what's the deal here? It was a big realtor sign there. And I'd driven by it a few times and just hadn't seen it. And quite frankly, it's one of my favorite stories, really. But the sign was there, and I picked up the phone. I called the realtor and said, how much? He said, well, it's under contract. It was listed for $89,900. I said, $89,900 for 12,000 square feet? And he said, yeah, but it's pretty much sold. And I said, what do you mean pretty much? He said, well, it's under contract and things look like they're going pretty well. So I hung up the phone and I said, oh, okay, all right. Well, I'm really into the it's about belief stuff. As you know, I kind of bring it up almost every show.
Yeah.
And so, and I know I've talked about this once before, but I think it's such a great illustration of, hey, it's not over until you say it's over or until I say it's over. And we each get to pick our outcome. So I said, wait a minute, I teach it's about belief. Maybe I should apply some of this right now. So I said, okay, I'm going to reimagine that this property is available And so I see myself going to the closing table and signing the documents and buying this property. So I picked up the phone. This was about 30 minutes later. It was only 30 minutes later. Picked up the phone, I called the realtor and I said, Patrick, I know what you said, that this property is under contract, and I appreciate that. But here's what I'm going to do. I'm going to send you a backup offer, and I'm going to send it for $90,000 because it's a little bit more than what your seller is asking for. It's a backup offer. I understand it's under contract. I get that.
Mm-hmm.
But here's what's going to happen. Your buyer that you have right now is going to fall out for some reason. I don't know why. It's not my job. I'm just telling you what's going to happen. So they're going to fall out. They're going to fall by the wayside. I'm sending you a backup offer because nobody does that. So you're going to have my backup offer, and you're going to call me first immediately as soon as that happens. Agreed? He said, yeah, agreed. But, our buyers are solid. I said, okay, you are free to believe whatever you want to believe. I am free to believe whatever I want to believe. So we hung up the phone. I wrote up the offer. I sent it to him. He has it. He acknowledged he got it. He said, thank you. 3 weeks later, I totally forgot about this. I got other stuff to do than think about the mechanisms of the universe and what they're doing behind the scenes. I don't have time for that. Plus, my brain isn't equipped for that either. In other words, I ain't smart enough. Anyway, so 3 weeks later, he gives me a call. He says, Steve, I'm calling you about your backup offer. And I said, okay, what's going on? He says, well, the property, the committee that's buying it, they're raising some questions. And I just want to know, just in case if you're ready, willing and able to exercise this backup offer. I said, yeah, that's why I sent it in. He said, okay. He said, change the language on this as is thing a little bit about the mold and some others. I said, okay, fine. I said, look, you write it the way you want it, send it to me. I'll copy and paste it into my contract, And he said, okay. So that's what we did. I sent it over, I signed it, initialed it, whatever I did. A couple of days later, he calls me back and he said, one little minor change and we'll sign off on this. So I bought a church. Well, I didn't buy it. At that point, I had to close it. So I've got all my money out on the street all the time. So I'm always looking for cash. I'm going to change that belief. There's something wrong there. So I got to make an adjustment there.
Yeah.
So, but at that time, I said, okay, I need $100,000, for closing costs and whatever. So I called up some of the people that I called up one person. I have a belief system that this is a great deal. I knew it was a great deal. Did I know what I was going to do with this church? No, it didn't matter because I knew that it had a huge amount of value, just like it sat. Just, somebody was going to come along and buy it from me, or I was going to figure out something a little later. It just didn't matter. It was just like recognizing a value when you see one. So I called up one of our private lenders and I said, this is what I have. I have a church. I'm going to need an extended amount of time on this. I can't tell you how much, but we're going to keep that kind of open. We'll write it for 12 months. It might be longer, it might be shorter. And I'm going to pay you 10 points. Now that's outrageous, right? 10 points. Normally you're looking at 2 points or 4 points for hard money private lending. We just talked about the program that's 4 points, right?
That's right.
And the reason I did that was I wanted her to participate in the profit without having a structured joint venture. I wanted to quantify that number for her. So she's going to lend me 100. Bam, she's going to make 10 grand right there, 10 points on 100. Not going to do any renovation money, not going to do all that stuff. Not going to have payments. And then I said, on top of the 10 points, I'm going to pay you 12% interest. So that's 22% interest return. If we did it in 12 months, if we did it in 18, it was going to be a little less. So that was a structure. She said, okay, where do I wire the money? Is it to that attorney or to that attorney? I said, it's going to be to that attorney, but don't do it until we get clear title. It took a number of months to get clear title on that property because it was a church-owned property that they had owned it since 1920. It was in trustees in a church, and it was just a mess. So we worked it through. We got to the point where it was time to buy it, bought it, sat on it for quite a while. I was holding it. I really wasn't trying to sell it. I was just waiting for the right time. And finally I said, I've got it priced like $400,000, So I cut the price, sold it really quick, paid off everybody, made a very nice profit on that church. Didn't do anything with it except for just bought it and sold it.
Mm-hmm.
There's a JV for you.
And that was a very interesting deal. It was in a neighborhood that we did a lot of stuff, and it was huge. It was 12,000 square feet. I remember, just walking through it for the first time and just seeing what it could be, and all the options that were there really for that particular property. It was going to be a monster renovation, a monster renovation. But at that price, even at the price you sold it for, that was a sweet deal for the folks that bought it, especially for what they want to do to it.
They got a great deal. I made some good money. I was just there early.
Your partner made good money.
Yep. It was a win-win.
Yeah. Those are the things that we're looking for. Those are the things that we're talking about right here. It's not a matter of not being able to find deals. It's not a matter of not being able to find money. It's just not a matter of any of that. You simply have to act. You got to, like Steve says, you just have to believe. You have to believe in your ability. You have to believe that all these things are already there and just tap into it because it's there already. It doesn't mean that everything's going to be easy. It doesn't mean that you're going to like everything that goes on. There's always still going to be peaks and valleys. But as Steve said earlier, it's about your perception. It's about how you react. How are you going to react to a situation, right? Because, go ahead.
We have to learn to accept the contrast, the challenges, the things that you're calling that are not easy, things that don't go the way we expect them to. Mm-hmm. How often does that happen, when things go the way we expect them to? A lot less in the way than when they do the way they expected them to. We just don't see that very often. We know it's going to be there's going to be twists and turns in it, and the challenge there is to just not react to that, but just step back and say, "Well, this isn't bad. Where's the good stuff?"
Mm-hmm.
And I didn't realize I'd gone so long in that segment because now I don't know if you have time for your story.
No, it's fine. It's fine. I mean, that was a perfect story. I mean, it's just, because it's literally everything we just talked about, I mean, there are a million different ways to find the deals, but you have to begin the dialogue. You've got to put forth the effort. A little energy has to go towards whatever it is you want. And these things are going to be there. Yes, lending is a little more difficult right now. It's not really difficult. It's just different. But you have to figure out another way to take advantage of it for your situation. It's as simple as that. So please, by all means, reach out to us. Go to realestate360show.com. Ask your questions. Go check out the free education that we have. Absolutely. Reach out to us with all of your questions, comments, or concerns, and we'll get you there. So we got to run, guys. Steve, thank you as always. Thank you for our producers back there doing their thing. Thank you, guys. I appreciate everything.
Thanks for watching and listening. We appreciate it.
See you next week.